and how I turn things on. To the point that give you an example, my speakers were working fine this morning, got into a meeting, turned on Zoom, and no more sound on my computer, had to reboot. So it's all in steps, it seems to be with these guys. Afternoon, Brenda. Hey, Patty, thank you. All right. Hey, Alex, how we doing? Andres, good to see you guys. Let's see. Am I sharing here? I don't think I am. I'm not. Let's do that. Good day. Hey, Don, how you doing? All right. Wow, we got a good sized group here today. So welcome again, everybody. As we get started, keep in mind, that would help for camera. Keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something, anything you like, make sure it fits your own personal risk profile and risk tolerance. Alrighty then. So here's our agenda for the day. We're going to start off with our follow us page. Then we're going to go into today's trades. We'll look at economic reports. We'll do a review of the market. We'll look at some upcoming trainings. We'll look at the weekly training topic, which is a good one this week, and your stocks in review, which is where we review candidates that you'd like me to take a look at. So here's our follow us page. Every one of these, whatever you see written there is it. Trading Post, meaning you can go to wealthbuildershq.com to get to the website. You go to YouTube, find us at Wealth Builders HQ or Trade with Rob. Stock Market Millionaire is our podcast. Search for that. Trading Like a Boss is all of our free resources are on there. Trading Post is also on Trading Like a Boss. So that should be a regular site for every one of you. Write it down if you don't have it now. Tradinglikeaboss.com. It is all of our free resources are listed up there. All right, just use it regularly. Entrance into the free trainings we do, replays, things like that are all listed up there. So take advantage of it. And of course, Andrew just dropped it in the chat for us as well. So today's trades, what, if any, trades did you all do today? Let me know in the chat box below or aside or whatever it is. Um, Brenda in here today. Brenda, I'm not seeing anything from you, so I'm guessing that nothing today, at least nothing that I got through from Amelia, maybe. But what in the world happened? Oh my God. Somebody sent me, I just look at my inbox 30 seconds ago and it had two emails in it. I look at it now and there are 270. Somebody sent me 268, 267 invites to meetings. My goodness gracious. Okay. Uh, let's see what we got for trades here. So, I'm not sure. Are you guys hearing an echo? I mean, I can move the mic a little bit further away, but usually with this mic, that's not an issue. No echo. Yeah, so I'm getting feedback from everybody, David, that they're not getting an echo. So I'm guessing it's something on your end, which in many cases could be if you're trying to use a phone and a computer, and you're getting the speakers coming back on both, the sound on both. Not sure. Trip said two scouts today on my favorites. AMD for 11.5% in 3 minutes. Boy, Trip, you're taking a long time now. 3.5 minutes, 3 minutes. Micron 66% in 7 minutes, but only two contracts due to the cost. Yeah, amen to that, brother. I hear you. Um, Jim said on the SPXW, the weeklies, he did on a put 3.57%, another put 2.26%, four different calls 2.9, 4.44%, 3.2%, and 35%. Nice. Really nice. Um, Jeff said no losses in the market, 23 seconds in total. Good job, Jeff. I love it. I absolutely love it. Um, Alex said, since my recent trading has exclusively been covered calls and that call diagonals, I haven't been thrilled with the way the market's been going, but at least selling calls has softened the blow. Okay, there you go. No trades for Brenda this week. Jeff was MNQ, so micro M, the micro NQ. NQ is the NASDAQ futures. Um, five contracts, nine trades, $250 total in profit. There you go, Jeff. Great job. Okay, lots of no echoes there. Yeah, Brendan said maybe the volume's too high. David, you can try turning it down for the echo. Not sure. Don't know what it is. Andrew, see if you can help David out there if he's still dealing with an echo. Yeah, way to go, traders. There you go. Alex said I did close one call diagonal for 71% return in 1 month on an energy stock. Of course, there you go. And listen, we'll take it, guys. We'll absolutely take it. Was I disappointed when there was a crash on an airline and a an airline position that I had a put I had took off? No, I wasn't happy that there was a crash. But if an option went up because of market events, so be it. Today we had Powell speaking, so I was a little bit concerned with what may or may not come from that today. So nothing for me, but I'm going to show you the why. So I may deviate a little bit from where we're going to start off normally or where we normally start off. I'm going to show you why there was nothing for me. I'm going to do it fast. If you get it, you get it. If you know, you know. If you're in pop, you'll know exactly what I'm talking about. You're going to look down and go, yep, 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 yep. Maybe, but yep, I see it, right? And if you're newer, just consider this your indoctrination, okay? This is the amount of time I spend looking at candidates to make a determination of yay or nay of am I going to trade it or not, right? And let me say this now because we've got quite a few people here. Before I know people get 20-minute lunches and half hour, and they got to start backing out at times. Someone last week had said that they were having problems with their Omega charts. If that was you, if you're having a problem with your Omega charts data, I think they might have a fix for it. Might. So please make sure to reach out to Genesis. You can get them if you go up to help. You can go and live chat with their tech support. Let them take over your computer and do their thing, and let them see if they can't fix what's going on there. Right? I know I had a problem and they got it fixed for me. So um, there you go, David. It was your microphone. Um, got it. Okay. But anyway, that's the thing. So if you do have or are having a problem, just make sure to reach out to them. We can't help you with that from the tech side. They can. So they got in and changed a file in my system, and it seems to be working for me now. So S&P 500, we'll talk about it overall, but we took a little bit of bounce today. We're at a bearish bias rank of 3. I could care less. VIX is high right now, so I'm going to pay higher prices on options. That's a consideration as well. Adobe, remember the last day on the far right, I'm going to zoom in a little bit, whether you can see the entire fib or not, I won't care. I just want you to see the candles on the right bigger. There ain't nothing about today that said trade it, right? Here on AMD. Yeah, did we have some room from 205 and a half to 200, but I don't like those 100-point levels in there. So I don't normally trade on that. So I didn't take that, right? Tripped it. Amazon, what am I trading? The bounce and the bearish market? I'll pass. APP, it's in the middle of God's country. There's nothing there, right? This breakthrough, a blue zone, thank you, but no, I'll pass. Broadcom, right? Maybe this afternoon, how it's setting up. Coinbase gave us nothing. Bullish trade on Costco, yeah, sure, on a bearish market, bearish day with a 100-point level or 1,000-point level now, but there, no. CrowdStrike, what, on the gap up? Trade a bullish trade off of a bearish pattern? I'll pass. Carvana, you could trade this one, Rob, maybe, possibly as the break of the 290 level, but I didn't, right? DoorDash gave us nothing. Goldman Sachs, a little wiggle off there, but you got the $800, 800-point level in there, so a little concerning. Home Depot, we don't have a lot of room. It's not done anything. Eli Lilly, no retest, nothing to trade. Good move up on MasterCard, but I'm not trading it up. Meta, come on. Swoosh. Okay, there we go. So nice little gap up today, 12 points after this massive drop, 600 down to 530. Now closer to 540, but nothing there. Netflix, I'm not trading bullish right now. Didn't give us a pattern anyway. Oracle, I got a bearish trade on Oracle open right now. It's a day swing trade. I'll share it with you in a minute. Reddit, RDDT, bounce, SPY, nothing. It's in the middle of nowhere. Tesla, nothing. Now, could you have found some trades in there based on intraday patterns, 5-minute, 1-minute, 3-minute, 2-minute, whatever? Yes, yes. My system, my style, my strategy, my mindset this morning between Powell speaking and the way the market was reacting, I didn't trust that we were going to have good setups today. The overall market's bearish. Remember, 70 to 80% of all stocks will move in the direction of the S&P. The overall direction is bearish, so it's going to move bear. So better, in many cases, to stay out, right? We've got, let me open up. No, it's going to open. Let's see. Oh, there we go. Okay. We've got, so these were closed trades from last week. So Coinbase and Reddit, they're done already. They're closed. We're out of those completely. If I cut those, cut, paste over here, get it on the other page, right? And let me just make nice now to fix those fields. Okay. So we've got an Oracle trade where we did 4 contracts. We got out of 2. We got in on the 24th and we got out on the 27th. 27th was Friday, I think, right? Yeah, today is 30, so Friday had to be 27. 24th was Tuesday. So we got in on Tuesday, first exit, 2 contracts, and you know that right from here. If the number of contracts shows 4, it's going to be yellow. Down here we have yellow bar, right? If you have a yellow bar, it says aggressive entry, 4x taken. The exits are 2x, 2 contracts, 1 contract, 1 contract. So 2, it would be 1, and then ultimately you'll get stopped out of the last 1, is what it's going to be, okay? But we're up $2,000 on those 4 contracts right now, of which, again, 2 of them are closed, okay? So we look at Oracle, and we got on our 24th. Let's go back to Oracle. We got on this day right here. Here we go, 24. We get in right here, right? We push back up. We failed, moving average. Bingo, right? Done. And that's what it was. Pull back to the 8. We got in the trade. We got taken out here because we missed here, didn't get to our target. It gapped down on 27th, and now we're moving further down. So next target to the downside is 131. So we're talking another $10 move we're looking for on the downside. If we wind up here about that 145 or so, ish, 6, somewhere around there, we'll be out of the trade with our stop, and we'll be done. The other 2 contracts will be gone. So swing trades right now, we had a couple of them that have worked okay. Right, so you can see we did Carvana for just about $7,000 on 10 contracts. SPY brought in $1,600 on 4 contracts. Meta brought in $6,700 on 4 contracts. So, and then we only had one other for the whole year. Okay, that was it. Yeah, this actually should say 26, not 25. All right, so we've only had one other for the year. So we've done okay on our swings. That's the only thing we have open right now is this Oracle. Everything else is day trades for us right now. Yeah, I didn't have anything else that wasn't day trade. Everything else was day trade for this week, right? Trip said, oh, good, Trip. So yours is working so far. Excellent. Broadcom had a nice downside setup this morning, but I was already busy. There you go. Alex said, but the market always loves it and cheers when Powell speaks. Yeah, I just didn't. Cheers would be bullish, right? And I did not want to trade bullish and bearish. I'd rather hit that downside, Alex. I'd rather know where we're going, right? Have that or following that direction in there, especially on a Monday when I've got to explain my trades to you guys. This market is a war news driven market without a doubt, Jim. Without a doubt. Yeah, no, I get you, Alex. I get you. You were only kidding. But it's definitely driven by, and the problem is it's not just the war. I mean, the stupidity that we're dealing with right now, the stuff we're dealing with all over the world. I don't know how things are where y'all live and how conditions have gotten just with people driving and the being courteous and even in a supermarket, drives me nuts how people will do things that are just stupid and get in your face about it. Absolutely. I mean, there's too much craziness right now, and the market is not any different between Russia, which we don't even talk about anymore, right? Yeah, Russia, Ukraine. So what? It's with billions wasted, spent, stolen. We don't care. The money with the Midwest with Somalia money, we got all of that we're dealing with now. We're going to sue and lock up people and prosecute. And I mean, there's so much happening. Every one of these things, every whisper of this has an effect on the overall market, which is why, to me, day trades have been the way to go, right? Because I get myself out of the mess. Here, if you look, this number is either 10 contracts or 4 contracts, right? They're full trades 10 or aggressive trades at 4. If we look at this page here, this one here, this is 1 contract trades. I'm going to move this over a little bit. And just keep these near each other. Okay. So we're up $331,000 on our 10 contract trades. On our 1 contract trades, we're up $43,000. What is that telling us? Well, we're doing better on 1 contract trades. Now I get it. There are 4 contract, 4X in here as well, but there's stuff we're holding overnight. And that overnight, actually, it shouldn't have been there. That overnight doesn't happen here. Every trade we're out. If we go back to this page and we look, Coinbase and Reddit on the far left are the same Coinbase and Reddit on the far right. If we put them underneath each other, we made $1,950 on Coinbase. Down on the bottom one, we made $195. We made $66.70, $66.69 on Reddit. We made $667 on 1 contract trade. Okay, so we're doing better on our 1 contract trades than we on a ratio percentile by not holding anything overnight. But we're crushing it by holding overnight. We're crushing it with some of our aggressive trades. We have less trades that go against us. When a 4 contract or a 10 contract goes against us, we have very little hit. But when a 4 contract or 10 contract wins, we have a much greater profit potential with the full entry versus an aggressive or the 1 contract trades on this page with the little orangey, top colors there. Okay. So overall, our market conditions have been conducive to small contract trades. But what's most impressive to me is that you're talking about, $43,000, almost $44,000 for this year, 3 months. If we're able to maintain that, which I don't believe we will, usually the first quarter of the month is a big hit for us. It's instead of being 25%, it's probably closer to 40% of our profit in the first quarter. So we're looking at, $100,000, $120,000 instead of $170,000 for the year. And that's just a guess, of course. I don't have any magic ball for it. And these are all non-funded trades, of course. But we're looking at those numbers there. And if you're trading 1 contract and you're following along, and these are only one strategy. This is a simple power option play strategy. Buying calls, buying puts. We're not doing spreads, straddles, strangles. We're not doing any upside down flip rubble bubble cake trades or nothing like that. This is straightforward buying call, buying put. Get in today, get out today. That's all this page is. We don't hold anything ever overnight in this account, and we never add more than 1 contract. Right? We go as low risk as possible. Take out the biggest movers in here, and you're still up, meaning the ones you spend the most money on, you're still up over $30,000 for the year. Like the bookings that we did earlier in the year, which are gone now. We don't have them. You're still up over $30,000 for the year by taking those out. So the opportunity is there, but again, you got to follow a set of rules. Let me see what I missed here. Yep. Is it news sensitive or tweet manipulation? Yes, David, without a doubt. It's both. Absolutely 100% right. It is all of that. It is fake news. It's real news. It doesn't matter. People, when you hear something on the news, do you really believe what they say? Or does something, no matter who it is, or does something trigger in your head say, is that really true? And social media, I've gotten to a point when I see something on there, I literally go into ChatGPT Perplexity and say, hey, did this really happen? And a lot of times it comes back as this is a story that's floating around, a fake story that's floating around on social media, particularly on Facebook, Instagram, whatever. There's no reference that I can find anywhere that says that this actually happened or that this person actually died or that whatever. So again, be very careful with what you get driven by. Um, yeah, my sleep is more important than forcing a swing trade. I agree, Trip. I absolutely agree. Can you even trust the Chat GPT or Perplexity? Okay, so Chat GPT has a propensity of being wrong 20% of the time, just as an FYI. 20% of the time. Perplexity's test was about 5%. So are they always going to be right? No. But there are differences with asking it a question of, yeah, guys, I do it all the time. I take screenshots of a social media post, video. I'll take a screenshot of the video and say, "Can you tell me what movie that is?" Because I love the scene I'm seeing, but they don't tell you the movie. And most times it can find it, not always. But that's the level of what AI is able to do for us now. Forget about what's going to happen in 6 months. We won't even go there for now. Um, but without a doubt, are there sometimes it's going to be wrong? Yes, 1,000,000% it's going to be wrong. Steele said, I like Grok. Yeah, and listen, I think all of them have their benefits. We use Grok. We use Gemini, which is Google. We use ChatGPT. We use Perplexity. And we have at least a dozen other AI tools that we use. At least a dozen others. Ones for creating web pages and at least a dozen others that we subscribe to, okay, that we pay for as a business. For me, I use Perplexity for everything market based. I like it. Um, but when I'm in the car and my phone is there and I have no phone calls to make because I'm a big believer in using time, trying to multiply time. How do I do that? Drive and get on the phone at the same time, right? Instead of sitting in my office being on the phone, I'll wait till I'm in the car and I'm on the phone, right? And I'll use Gemini and just start asking questions, and the conversations you're able to have with it and the things it comes up with are amazing. I sent my wife a text the other day. I said, I'm leaving my office. Do you want to go over? There's an Italian restaurant in Westbury called Vincent's. No, sorry. I said, do you want to go to Whole Foods tonight to get a couple things? And then I said, oh, also, and not just go there. Why don't we go to Vincent's for dinner and then we can go there afterwards? And Gemini comes back and goes, that's a great idea. Since Vincent's is in the same area as Whole Foods, you can go to Vincent's, get yourself something to eat, go across the street and go to Whole Foods and pick up what you need. And I said, well, that actually was the text you were supposed to send to my wife. And he goes, and then it's a man's voice. Gemini turns around and goes, okay, I'll stop butting in. I'll send her the text. Which I thought was friggin' hysterical. But you can have actual conversations with it. So, is it going to be right on everything? No. But are we saying if I go to Google right now and don't use um, the AI portion, um, I don't know, what does the standard spaceport on that was AI though. See, this was AI. I asked this question because I got a board that's got bad holes in it, meaning a bad pegboard. It's not the right size. Um, so what are the Etsy home and lifestyle trends for spring? Okay. So now this is an AI overview. This is Etsy, right? Here's Yahoo. These 5 home and lifestyle trends will take over spring. Is that now I see it's got a date of 2026, but that doesn't matter. Have you ever seen on a social platform where they date a news story today and it's from 6 months ago? They just put it on with a date of today and make it look like it's brand new. The president said, no, he didn't. At least not now, he did. Um, First results on Google will probably be AI anyway. Yeah, they're moving. SEO is dead. The traditional SEO, search engine optimization, is dead. And the way that Google is moving away, knowing they're going to lose customers, without a doubt, they know they're losing customers. They're losing business, is what I should say. They know they're losing business, but if they don't, they're going to lose the platform because ChatGPT and the likes are going to monetize with smart answers, not you paying to get your post up on the top, but you've got the actual answer, documented references and so forth. It's AEO, it's called, is taking over the world at this point. Um, Next 3 quarters of the year could contain end to Iran war, FOMC chair change in May, maybe lower rates. We're getting close to 10% correction, might bounce up off of it. FFIA World Cup in North America, 250-year anniversary, July 4th. Next 3 quarters could become bullish. Yeah, and that's just it. Jim, I agree with everything you just said in there. And let's top it off with this cherry of I don't believe that the market is bearish. And I don't mean we're not in a bearish move right now. I mean that I don't believe the market is ready to go down. I think we're going down based on situational. Is there fear and panic out there? Is there some other things that are driving it down, stories and the likes, right or wrong, that are leaning one way or the other? Without a doubt, without a doubt, right? But I don't think that those stories are the overall market condition. I think it's a reaction to what's happening now. And the second that something like that resolves, you saw it when Trump resolved some of the other wars and the other things that happened early on in presidency. When some of this starts to fix itself, things will get better, in my humble opinion. Okay. So I agree with you there, Jim. Brenda said, "How do you fact check them?" You can go to other AIs to do it, Brenda, but how do you fact check what's on the internet? I mean, you know the old adage: it's got to be true. It's on the internet, right? One of my favorite T-shirts of all times. It's a picture of what looks like a monitor with a YouTube arrow in it, and the saying is, "I've got this. I watched a YouTube video." Right? Yeah, I've done that too. I watched a three-part video series on how to fix a light in my truck, and the third part was wrong. So I got this whole thing stripped apart, and he had the wrong information. Oh no, it wasn't that year. It was 2 years later than yours. Great. Now what? It doesn't work the same way. Different parts. So just because it's on the internet, don't make it true. Yeah, Trip said, watch out for rates. If Gulf oil is removed from the system for a year or more, which many people are saying, inflation will ease higher without a doubt. You could ask the same question different ways, Steele. I agree. Last year, the day Trump randomly announced a 90-day pause on tariffs, it sparked the third most bullish day in history on the S&P. After 6 weeks of nosediving, that random post caused a huge bullish bounce. And listen, Trump's a businessman. Do you think there might be some share buying going on in there in the background? I mean, from his businesses, whether he's involved in it or not, you know the businesses are. Okay? For sure. For sure. All right, economic reports. Let's go check those out. I just had them up actually. So let's go here. Let's go look at more. So Powell spoke at 10:30 today. Red big report. Tomorrow, Jolt is at 10. Markets open. Caution when if you get in trades earlier in the morning. It won't matter for Jeff, who's in a trade for 6 and 8 seconds. That won't affect him at all from 9:30 to 9:30 and 6 seconds. Uh, And then we've got Wednesday, we started 8:15. A lot of red this week, a lot of red reports, a lot of big reports. 10 o'clock is PMI, Purchasing Managers Index, big report. Unemployment is pre-market on Thursday, but a big report. And then average hourly earnings will come from some of the data and the unemployment stuff, but same type of report. But definitely something to be cognizant of. There are definite fears, especially with government shutdowns, who's getting and not getting paid, and some of that. I mean, you can't blame some of these TSA people. What do they do? I mean, I'm a new TSA agent. I got no real seniority, um, and I'm not getting paid. I got to work. You know, I may love the job, but I'm going to quit and go find a job doing something where I get a paycheck so I can pay my mortgage. Because ironically, the banks, I don't understand the banks. They don't want to wait for their mortgages from someone that works for TSA or whoever the government is not paying. They still want to get paid. Go figure how cruel of them. Right? Yeah, markets are closed on Friday. Exactly. Um, for Good Friday. Yep. Yep. We've already sent notices out internally. Well, you'll see it coming out from us. So there'll be no classes or trainings. There'll be no coach's playbook on Friday or anything because we're closed. Um, no trade related news on Friday for US since it's Good Friday. Yeah, exactly. Exactly. Guys, just hold on one sec. All right. Sorry about that. Let's go back into the PowerPoint and let's look at a review of the market. So go back to the S&P. Okay. So we blew through the 67.65, the 67.70, which was the 618. We had a little blue zone in there from a previous level back here, 67.58. Okay. We blew through all of that. All of the swing highs and swing lows gone. We put in a new swing low here. We had a swing high here. Okay. This one failed, could not get higher. This right here, if today winds up finishing as it is, yesterday, Friday, will be a new swing low. We will be drawing a line off of yesterday's date. We can't do it yet because we don't know if we're at the low yet today, if we hit the low already. So that would be it. We're not leaving it there, but that would be it. Okay. So when you look at the overall push, and we had a really strong market for the last, the whole year, for the last 1 year, we've had a strong market from April. Good bullish move, not giving us a lot of horizontal points to work off of. So we've got to focus on previous Fibonacci levels inside of there, right? We've got this negative 272, which is a hesitation point. So let's see. Do we need a Fibot here? 63, 43. So 43 to 73 is 30. Oh no, 130. Sorry. I'm like, no, that can't be 30. 130. We got 198. We don't need to split this level in half. We're fine. The fib itself is good. We're fine. Little sloppy on the way down. You got a day down, a day up, 4 days down, 2 days up, 3 days down, 1 day up, 1 day down, one up, three down. I mean, it's ugly. Ugly. Tripp said 6302.05 is the 10% correction from the all-time high. Okay. So if we 6302, I'm going to draw a line on the chart. Yeah, I don't think I'm going to use that line. I'm going to use this line. All right, so let's change this to 6302.05. 6302.05. Right, I'm going to make this a medium line. I don't want to make it red or blue. Yellow won't show up. I don't like the greens. Orange, clashes too much with the red. It's too easy to blend in. I need to jump out. It just looks like moving average. We're just gonna make it black. We're gonna do a standard black. I don't know if that's black or not. I don't think so. All right, we're gonna make it black. So, and then we're going to put a note. 10% correction. Actually, I think I'm going to change that text to black. So I know the correlation is there. Okay. So that's our 10% right there, which takes us down to the negative 382. Okay. We do have an overlap there of that 382 fib line. Let's see if we get rid of that. Bring this in, scrunch down a little bit. There we go. Okay. So that takes us down to that level. So now at least you can see where it is on the chart as far as our level goes to, right? So the problem we're running into is this. Let me grab a red pen. Oh, get the crosshair out of there so it doesn't look like there's a line there. So when you look at the V top, the swing high we had in there right here, the day that we put in our top, right? We were very chop related here. Very chop, not deep troughs, but very chop. This one here was a big pullback and a big bounce. It went all the way up to 382, so that was definitely a good place to draw from, right? And then we failed, and we've had two strong bearish days. Today we would be up 11 points if we closed right now, although the candle is black. Um, uh, Although the candle is black, it's still a bullish candle from yesterday's close, right? Is what we're looking at there. So you got to look at this 63.43 level on the downside, 64.73 on the upside there. Very important level. That is, that swing low that violated as we broke, Friday. Big gap down Friday, and then this little recovery today. But that 10% correction, anything up to that 10% is fine. It's standard. It's expected. It's a good thing, right? Because just like with fireworks, like a Roman candle, if the market just goes straight up, the fireball is just going to come straight down, right? You want it to move up and then pull back, move up and pull back, move up and pull back, right? That's the overall pattern that we're looking for there, right? These pullbacks, these retracements are strength. It's a breathing point. It's a place to rest and retest, right? And reconfirm the overall pattern that's out there to see is this bounce from here real or not? Okay? So we don't want to go straight up. We don't want to go straight down, right? We want it to move. Now, straight down can be a much different scenario. But the average bull market lasts 7 years. The average bear market lasts 9 months. All right. So I'm not talking about recovery of the market. I don't mean we crashed down and in 9 months we went back to where we were. No. I'm talking about how long it lasts in that bear. The '08 was years, right? That we suffered through some of that. Okay. Or some suffered through it. I know my neighbor did, right? He was ready to retire from his civil servant job, and he watched his 401k become a 101k and couldn't do it anymore, right? So he was stuck. By the time he retired 2 years ago, he aged out in his career. He aged out, got a few promotions along the way, which was better for him, I guess. But he had aged out, and he got back to where he was basically, with what he had. So because if you have $100,000 portfolio and you lose 50% of it, to make it back, to make that $50,000 back, you now have $50,000 to work with. That's 100% gain. That's a lot harder. It's a lot harder. Could you extend the fib to Friday's low? Who's asking that? What do you mean by that, Brenda? You mean getting rid of where we drew it from and draw it from Friday instead? Number one, you couldn't do it today, even if you wanted to, because today is not closed. We may drop even further. But in general, what we're looking for here, let me get off of the screen with my mouse again. What we're looking for is after the V top, we went down, and what did this do? Sideways. Quick move down. We kind of went up and just sideways it there, right? Move down, move up. And now we're starting to see that this is a pattern, right? In here. And then we get this move down, and we get a much bigger move up. So this was the outlier, the standout, right? It violated the 236. Heck, it went all the way up to the 382. But it violated the 236, which usually tells us that using that as your low gives us a qualified location of where the fib is. You probably put it in the right place. Good. You got it? I understand. Okay, good. Um, uh, okay, Jim said from the Traders Market Intelligence report, you said where to draw the lines now. Confluence lines, SPX, daily chart. If you were to draw the fibs from 41.81 to 67.65, the 118 fib, uh, is 64.60. Thursday's low difference, today's high difference. 10% retracement number is 63.0205. And what did you may have given me the same number that Trip did? 63.0205. Okay, good. So Jim laid out. Jim laid out, and guys, if you're not following along with Traders Market Intelligence Report, you should be. Dang it, just I don't believe it. I cannot copy. Andrew, we got to figure this out that I should be able to copy content comments from the chat. See if you can copy Jim's comment and repost it to everybody else. If not, get with Sean and figure out what we have to do to fix this, that at least the hosts should be able to copy what's inside of the text. Um, let me take this line and move it closer. Let me bring this closer too. Actually, let's do it this way. Let's do 10% correction, 6302.05. Right. So at least we've got the number written there, and the line is a little bit closer now, so you can visualize it. You can see it on the chart. We scrunch down a little bit. Yeah, Alex said Traders Market Intelligence Report is a great resource. Oh, absolutely. Um, Without a doubt. All right, Andrew, take a look at the comments that Trip had just dropped in. Perfect. Andrew was able to. This was Jim's analysis that he took from Traders Market Intelligence Report, which is a free resource, guys. I put it out. It's our number one open email every week. Is this email? Um, and viewability. So definitely check it out. I mean, it's setting you up for what's going on in the week, what I see happening. And I'm the only one that does it unless I'm on vacation and I'll have another coach step in. Otherwise, it's me that's doing this report every week. I probably do it 48, 49 times a year. Perfect. I appreciate you getting that in there, Andrew. Thank you. All right. Let's go back into the manual. So upcoming trainings, guys, we've got Trading You. Let's see, that'll be tonight, and that will be with me. Right. So I'll be teaching Trading You this evening. Um, Inner Circle comes up. The check-in is tonight. That's Trip at 7 o'clock. The quarterly is April 17th and 18th. Mastermind group comes up on the 31st, which is the full training. That's at 8 p.m. And then we've got Wealth with Spreads Q&A on April 1st. April 22nd is Covered Call Explorer Q&A. Pop Covered Call email, you're all on regular schedule with the exception that Friday is not a market day. It's probably when I'll still do my report. I don't think I can get it done Thursday. I will try for Pop, but it's not going to make a difference whether I do it Thursday or Friday. Okay. So, and Trip will get his in there at some point as well for Cover Call Explorer. Free online workshops, Power Hour, Trading Coaches Playbook. Andrew, this is incorrect. It's not this Friday because we're closed, right? So it would be next Friday. And then Patterns to Profit. The next one coming up for that is April 2nd, which is next. No, that's this week. God, we're in April already. All right. Patterns to Profit. That is with Tony. Oh, that's the live. That's the live training, though. I think. Yeah, I think that's the live training. $49 class is what he's doing, guys. He's going to show you how to use patterns profitably. Spot high probability setups before they take off. Pinpoint precise get-in zones for smarter entries, and avoid account-killing patterns and stinky trades that blow up your accounts. Can you drop in a registration link? It looks like you already did. You did. So Andrew dropped that in, guys. If you're interested, it's $49. You can't really make a mistake with it. And you know me, you hear power option plays, right? In Power Hour. If you come back to me afterwards and say, I didn't like it, give me my $49 back, I will. Andrew, write that down that I said it. All right. Um, okay, good Trip. So weekly training topic is fighting the bear. Now we were talking already about the S&P 500. Of course, we've been in this bearish market. This topic came out of one phone call. And that was the conversation's title, I'll give it. From a friend of mine is how do I fight the bear right now? I said, what do you mean? How do you fight the bear? And he said, well, the market's going down. How do I fight it? How do I still find stocks that are going up and make money? And I paused for a moment, and the pause was somewhat of this. How do I find the so how do you make money up when the market's going down? Right? Is basically what he was asking of me. And my answer was fairly short, at least my initial answer, was why? He said, what do you mean why? I still want to make money. I said, I understand that. But why do you want to do it on trying to move, on finding stocks that are moving to the upside? Are there some? Without a doubt. Yes, there are stocks that are moving to the upside, right? Netflix is moving to the upside, right? But here's the thing, it's moving to the upside right now. Does it roll over and in sympathy with the rest of the market go down, even though it's got great news about it or whatever it is, right? It's high probability. So why in the world would I want to fight the overall market and look purposely for things that are moving up? It wasn't the question of when the market shifts, how do I start identifying which ones are going to be the earlier ones to pop? It wasn't that. It was right now, market's crashing down. How do I find bullish candidates? And my answer is you don't. That should not be what you're going after. And I'm going to tell you right now, someday I'll make a table for it, a little infographic, a nice little pretty picture of it. But if you're not already trading profitably, then don't trade against the overall market. Just pick direction. The market's down today, find bearish candidates. Market's up, find bullish candidates. Right? The overall pattern is bullish, trade bullish. If it's bearish, trade bearish. Don't fight the overall market. If you've got that experience, though, can you counter trend trade? Without a doubt. Also, if you're the type of person that has a problem exiting a trade, don't counter trend trade because there's a high probability you are going to fail. To me, a counter trend trader is the equivalent of a breakout trader. Oh, it broke out, I'm in. Okay, but that breakout could be nothing more than a head fake, which could be scary. That head fake is what people are chasing after and getting in a trade, and it was nothing more than ha ha. Right? There's an indicator. I have access to it. I actually have a version of it on my Omega charts that someone created. It's proprietary. I cannot give it out. But eSignal is the one that owns the indicator. At least they own the name. They don't own the indicator. They own the name. And it looks inside of a candle, right? The candle closed down today, 10 points, $10 on Meta, let's say it closed down. But it looks inside of the candle and says, yeah, but the majority of the time, the majority of the interest or the volume in this stock took place in a bullish territory today. That bearishness, that was like 2% of the entire day is where it was. So was and and it happened at the end of the day. So did all of that happen in relationship to covering shorts and things like that, which this is very good for helping to understand. So just because the market made a move, that doesn't mean you've got the whole picture of what it's doing there. There are behind the scenes things that you may or may not fully understand. Now, don't get me wrong, there are some things that it really doesn't matter whether you get them or not. Right? Being able to read inside of that candle is a very in-depth analysis that an advanced trader would be looking to do. Other than that, does the average person need to do it? Absolutely not. I taught a good friend of mine how to trade futures. We met every day we got on our cell phones, we called each other, we sat with our trade station open, and I taught him and we practice traded for weeks. And he was just angry that we weren't doing real money. And I couldn't meet this one day, and I trade the YM. I'm a big YM fan, which is the Dow, right? You don't have large volumes in the Dow. And he went ahead and said, you know what? I said, you're still going to paper trade? He goes, yeah, I'm still going to paper trade today. All right, I'll catch up with you afterwards, but I won't be there for our trading session. So he went ahead and he had about 50K, I think it was, in his trading account. He went ahead and he put in 25K worth of trade. funded trade at market. So what happened was, and I don't know what the Dow was going for at that time, 15K. I don't even remember. Right? It's $15,000, right? Was the Dow. And he put an order in to buy. So it goes from 15,000 and he filled, and I think overall he put in like 25 contracts or something like that. 50 contracts. I don't know. Let's just call 25 contracts and make it easier to do than 25K. Okay. So he's got 25 contracts in there. Well, he fills two of them at 15,000. He fills two more at $15,045. He fills two more at $15,100. He fills eight of them at 15, I'm sorry, $15,240. See where I'm going with this? They jacked his order up based on what he did when his 25 contracts got filled. When it was all filled, said and done, and he looked at his account value, the account value was no longer $50,000, it was now 25,000. He closed out the contracts that he had. He sold them all out, got out of that trade, sold it all back to the market, 25 grand underwater, closed his futures account, and never touched it again. All right. He didn't fully understand the market he was trading, but he decided he was going to jump in it anyway and do it. And that is definitely the mistake that traders make, is they're trying to do something that they don't fully understand, but they're going to do it anyway. Someone that walks into a live trading that I would do, a 2-day event that I would be teaching, and we get to credit spreads on day two, and I just made 9 grand on the credit spreads that we did, and someone comes up to me afterwards and goes, "I'm so excited. That was a great session." I'm like, "Oh, I'm so happy to hear that. Thank you. What do I do now?" "What do you mean?" "Well, I did those same trades." "What do you mean you did those trades?" "I told you at the very beginning, the only way I'll teach this is if you all agree you're not going to do this with real money." "Well, but I did. Now what?" I said, "Well, did you read the fine print on the contract when you came to this 2-day event?" "What fine print? The one that says Rob's phone number doesn't come with this class?" "I can't tell you what legally to do. You placed the trade. I told you to do it as an example, as a sample. You decided to put real money into this trade." Right? They're jumping in. Why? Because they saw something that looked good, but they don't understand how to fulfill. They don't understand how to manage that position. Right? And it's just horrible. Horrible what people have had happen. Scalper Ed says, "I have done that." I've had a lot of people doing it. I get it, Ed. I know. I had a lot of people do it. Um, yeah. Jim said, "I thought we were taught as a new trader, do not put more than 5% into a trade." And, again, Jim, look, if you got a $500 account and that's all you have to your name, that 5% doesn't work, right? That's $25. It doesn't, right? So it really depends where you're at in your trading. And the magic number, if you listen to Wall Street, is 1% to 2%. Is the most you should ever put at risk. And then there's the question of, okay, if I have a $100,000 account and the most I should put at risk, that's 2K. Does that mean I should invest $2,000 in a trade or have $2,000 as my stop loss? Right? Maybe I put 20K in the trade with a $2,000 stop loss. Right? Now that doesn't mean you're going to get out of that 2,000. Could gap right through it. Okay. Um, yeah, I mean, exactly. They come after the coach and say, "Hey, you told him to do this trade. Why do you think I recorded every class I ever taught?" Because if someone said, "You told me to do this," oh, well, show me on the recording where I did, because it isn't there. I was investigated by the SEC when I worked for another company. Every one of my audios, my recordings were reviewed, and they found zero wrong with me, because I don't say shit, excuse my French, that isn't true. Period. I will not get myself in that kind of trouble. Yeah, Brenda, exactly. It wasn't a matter of that whether they got sued or not. It was that they just had the SEC come after them. There were people that the SEC went after from multiple companies. Multiple companies got hit with this, right? And it all started off with one company they went after and found out that they weren't trading, and you know, and that's okay. Listen, if you got a high school football coach that can really make you a great player, but he never played football, who cares? Right? Who cares? But if he's out there telling you he was in the NFL and you got to do it this way, well, that's a whole different story. Right. So Dennis said, if you're going to trade only 2%, then the other 98% of the 100 grand shouldn't even be in your trading account to begin with. Yeah, never say anything the prosecutor can use. Exactly. I'm watching The Sopranos right now, and it just reminds you of it constantly. There's two attorneys I follow on TikTok who say if a police officer says, "Can I do this?" No. Police officer comes to your house, say, "Hey, your next door neighbor was robbed. Would you mind if I come in and talk to you a little bit about maybe you saw something?" No, but wait outside. I'll be right there. No, you're not allowed in my house because they're trained to look around and say, "Oh, what do you have over there? That's in plain sight." No, we just want to ask you some questions. Ask my attorney. Um, yeah, so Dennis, that's tough, right? Keep in mind that's in a per trade situation, 2%. So I'm a big advocate, and I know we're running out of time here, guys, but I'm a big advocate that says, let me do it here. Let's do it this way. Let me get a notepad because it'll be cleaner and it won't disappear if I make a mistake. Where is my notepad? Okay. So account size, right? 2K, 5K, 10K, 25K. We'll leave it at that. Okay. Um, dollars per trade. Ah, that okay. Probably should have just done a spreadsheet. So let's do it this way: equal dollars per trade. So with a $2,000 account, you're looking at doing somewhere between 2 to 3 equal dollar trades. All right. So if you said two equal dollar trades, each one you're going to do is going to be about $2,000, right? If I'm looking at a $5,000 account, I'm looking at 4 to 5 equal dollar trades. $10,000 account, you're looking at 7 to 8 equal dollar trades, right? You're looking at a $25,000 account. I'm looking at actually would be 7, 8. It'd probably be more like 6 or 7, 6 to 7, 6. No, hold on. It's probably going to be somewhere between 5 and 7 equal dollar trades because $2,000 I would be fine with putting 2 grand into a trade. $25,000 you're probably looking at somewhere about 6 to whatever the number comes out to be. Okay, from there, these are equal dollar trades. $2,000 account, you're going to break your account into 3 pieces or 2 pieces is easy math. Is $2,000 of account, $1,000 per trade. Now you take that $1,000 and the most you're willing to risk is 2%. 2% risk. So we said $2,000 times 10% would be $200 times 1% would be $20. So times 2% would be what? $40. $40 would be your risk. That's when you're getting out of the trade. All right, but that's how I would look at the risks there. Now, Dennis, if you go to a financial planner, they're going to have a different reasoning or opinion behind how they look at risk. But I've never seen financial planners that after the market comes crashing down, they're calling you saying, "And drop more than 2%, we should get you out." I've just not, I've not been privy to that ever. Exactly, Steele. So, Brenda, equal dollar trade says if I have a $2,000 account. That means every trade I do is going to be as close to $1,000 as I can get it without going over. That might mean one contract on Coinbase on a Thursday. It might mean 7 contracts of Ford on a Tuesday. But I'm putting $1,000 into the trade. So I'm not saying, ooh, that Meta trade or that APP or that Amazon trade is, I'm betting it all on black, or I'm gonna put 75% of my account into that one trade. You're going and putting equal dollars into each trade instead of equal contracts. I teach equal contracts because it's easy. It's a lot easier to teach you 10 contracts than it is to say, okay, let's figure this out. And you would only be trading 7 contracts, and the contracts are now $6.77 each. How much is that? Too much freaking math. Too much math. Right? So I just teach in 10 contracts, we use whole numbers. Right? It's easier. Still said it feels really hard to keep to this. Was easier in the past when it was when I was trading. Okay, well, I get it. Um, I get it, Steele. Dennis said I get it, but still a big believer that if the money is in the account, then it's still in for the game. And yeah, so again, you could decide to put the whole $2,000 into the market, Dennis, but not in one trade because now you're betting it all on black. And I've had that. And I'll tell you this, and then we'll wrap it up with this, folks. But I had that happen at an event. I mean, it's 7:30 in the morning. I'm walking around saying good morning and hi to everybody. And I walk up to a couple that are back for a retake. And the wife looks at me and goes, tell them. And I'm like, this is not going to be good. I mean, this is a crappy way to start my day off. And his very first trade he did awesome, bought 10 contracts, home run, made $1.50 or something, just killed it, just out of this world. Okay. He said, well, the next trade I did on General Electric, on GE. All right, that's fine. I can't really comment on GE. I don't really know much about it, but okay. Anyway, he said, I bought the options for $1. How many did you buy? And the wife looks at him, and he finally looks at me and goes, all of it. All of what? My whole account. The whole value of your account, the whole dollar, every bit. Why? Well, I got this figured out. I said, on one trade? One. The one you got lucky on. One. Okay, good. He shows me his system of what he came up with. And I looked at it and I said, that is an absolutely amazing system. He goes, is it really? I said, yeah, it's amazing you didn't lose the money faster. What do you mean? This was a good system. I said, you bought the options for $1. What's your question? Should I get out of them? How much are they worth? 10 cents. When do they expire? This Friday. Do you think it's going to go back to $1 by Friday? Oh, God, no. Then why do you need to ask me if you should get out of this or not? You don't know? What do you think you should do? He goes, I think I should get out. And the wife hits him. Not hard, but you slaps him in the arm. You know? I told you that a week ago when they were 25 cents or something. But he lost 90% of his account on one trade. He put his whole account in on one. Dennis, and for everybody, if you're right, man, it's a home run. But it's not the right that I'm worried about. It's not the, oh, I missed it. It's the, oh, darn, I had it all on red or all on black, and now what do I do? Now I just got my head handed to me. Yeah, a lot of input, a lot of good questions. I agree, Jim. It was a really good day today. We didn't get into the trades to look at your candidates, but there was a lot of really good questions and comments today. Good class, Ed said. Yeah. Great info again. Thanks, Tina. Much appreciated. Hey, everybody, we're about done for this one. Listen, Andrew dropped some links in there, including the one to Tony's class. $49, folks, to be able to watch the Pattern Whisperer. 25 years experience focused on patterns, what they do, and how they work. Don't miss out on it. So we'll leave the room open a couple of minutes. Make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. I will see you all at our next update soon. Take care, folks. Bye.